Allan.
Hello, everybody, and thank you for joining me today. It's Allan Laboucan with the Rocks and Stocks News Show. We've got one of our sponsors on today, which is Meridian. And what makes me excited about Meridian is that there are not a lot of companies in the development window of the Lassonde curve. And I believe that those are critically important companies for the mining sector. And I also believe that we should have new investors getting interested in gold and copper stories. And when they look at companies of that size, there just aren't very many of them. So we need more. And when it comes to companies in the development window, very few have the statistics that Meridian has on their Cabela project in Brazil. And so I always enjoy chatting with Gilbert about the company. Gilbert, thank you for joining us.
Thanks, Allan. It's nice to be here and part of me on 2024, a new year for the mining industry and the natural resource industry. And I'm hoping that I do see that commodities are stabilizing after some 7 quarters of tough economic markets for the commodities. So very much we've advanced the Cabela project over the last 18 months with sterling results, and we just hope we see this year as being a year where we can see real value coming into the equities of Meridian.
The statistics that really stand out to me and make you quite special, Gilbert, is in your preliminary economic assessment. I watch closly for margin. I think that if you're looking for a mining company, focusing on those with the healthiest margins are the best. Now, when it comes to a development company, having a low capex to build a mine, a very fast payback due to the grades and the low costs estimates, it makes you guys quite unique because you guys have that low cost, fast payback, high internal rate of return. And there aren't very many in the development window, especially with those kind of statistics that you guys have.
Well, it's interesting. When we released our resource statement back in 2022, nobody really understood the significance of it. And then in 2023 March, just at PDAC, we released the PEA of the project, and all of a sudden, the company had this value, a net IRR. We could determine out what we were trading at as our NAV, and it was important that we brought that economics. We used the commodity prices that we use are very conservative. They're in line with banking. $16.50 for gold, $3.59 for copper, $21 for silver, and that generated that incredible NPV.
For the copper,
$3.59 a pound, okay. So very, very low. And then that generated the NPV of $573 post-tax, an IRR 58.4, and that sort of presents the company today trading at about 0.08 to NAV, which is ridiculous. And I was chatting today just with a technical group, and they were very complimentary on the high standard of the PEA that we'd produced. But then, as we generated that single valuation on the Cabela deposit, it really brought to the surface the concept of a hub and spoke development strategy for the VMS belt. And Allan, this is what we see around all the VMS belts, be they in Australia, Canada, America, not too many in America, some in Mexico, that you have a central hub which lays down the foundation for building the district. And with the standalone economics of the Cabela deposit, we can then look at how we expand that in the longer term development scenario to be that central hub where everything else, all this like Santolina, Sakuri, other deposits are fed into this central mill. Because what that means for me is all these other peripheral satellite deposits, they don't have to carry the capital expenditure to build a plant because the plant's already been paid back, Allan. So you can imagine how much higher the potential for high economics and valuation on these satellite deposits, knowing they don't have to carry the capex to build a mill. They just feed into that existing mill.
That is a hugely important factor to me, because, I don't know if people really understand that completely, in that, the economics of the plant are quite exceptional just based on Cabela. Then you've got these satellites, and you just truck the material to that plant. And you don't have to, those satellites, which by the way, standing alone on their own, look quite exceptional. But then to have a plant that's paid for by the first deposit really is quite spectacular when you start applying that to second and third and fourth deposits on the belt. And again, another reason that you guys are quite an exceptional story in that development window of the Lassonde curve.
No, absolutely, Allan. And then when we sort of demonstrate the standalone economics of the Cabela open pit, you can then start attributing in your mind what's the value of the greater belt then if it doesn't have to carry that capex to come into future production. And that's very important for mining companies. We want to have low capital intensity, and if also the satellite deposits, basically you just have to connect them by a road to the Cabela mill, then the financial return increases. That even the Cabela mill is quite large. We in the PEA we've had it at 2.5 million tons, and the capex was some 180 million US dollars, including contingency. And that capital intensity we benchmarked across comparable tonnage, across comparable deposits in Brazil, and it's right in the middle of the fairway. There's no hiding of capex. There's no. Often you'll see mining companies that have huge, very good NPVs, but they've got staged capex. They hide the true capex effectively. So what we've done, here's the capex to build it, some $180 million. And for a junior company, that's very achievable. When you look at, say we had a potential project financing, you might get 60% debt and 40% equity, almost like what you have to buy a house here in France. But that's so achievable for a small junior to actually finance and then emerge into becoming a mid-tier company. Unlike, say, a giant porphyry, all these very complicated low-grade deposits we see getting bandied around at the moment. This is low capex intensity. And we've also, what we've done recently in respect to the Cabela mining, and we can extrapolate this across the belt, is the low OPEX. And like the belt's upside is not, some companies' upside is like 1,000 meters down below the surface. Our upside is the next soil anomaly at surface, maybe 1,000 meters along surface. So our OPEX is very low, but again, it's very accurate. It's right in the middle of the fairway of comparable projects in Brazil. A lot cheaper than international projects, and I guess that's just a reflection of the low capex and low OPEX environment that we have in Brazil.
And I'm always trying to put things into context, Gilbert, from the food chain of the mining business. The majors, they need more new mines. Then you go down to the mid tiers, they need more new mines. The small miners, they need more new mines. It's all about growth. And that's why I see a lot of these majors are not getting much joy, despite them making lots of money and paying dividends and paying and buying back their stock. That's not really growth. Investors want new mines. The industry needs new mines. And so then I look at those in the development window, and because it's like a menu for investors that come into the space. And right now, there's not a lot on that menu. But if you look at the companies that are on that menu, most of their capex starts at a billion or more. And a small developer trying to develop something like that, they have to bring in a partner. They have to have a big brother that comes in. In your case, you have that very low capex, high IRR, and quick payback, which again, it makes you very unique in that development window of the Lassonde curve.
Mm. Well, it's just as we develop this project, it's not only the fact that we have 50 kilometers of strike and multiple assets along this belt that were developed by this hub and spoke strategy. What we like about where we're located is just, I guess we could almost call it a sovereign security. And we've seen in over the last couple of years, particularly in South America, where some nations have just made decisions that are against mining. But Brazil it is really dominating South America in respect to its multi-layered economy. We have very workable, stable mining laws, integrated environmental labor laws. And when you say about the pipeline, to have a project which I think has the potential to go for decades, it's trading at 0.08 to NAV, but in a jurisdiction where you're not going to lose your license, or you're not going to be chased out of the country on very ambiguous labor laws. This is the stability of Brazil. So this is where we're seeing a lot of companies wanting exposure now into Brazil, both for, say, Lantam desks or people wanting copper, or say a copper fund that wants exposure to gold. Well, we fit that bill, or we might have a gold fund that wants exposure to copper. We also fit that bill, or even single commodity funds. And we're seeing an emergence now of generalist fund into the equities of Meridian. But it gives a stable investment in respect to sort of some of the jurisdictions that we see in the world today, but also a jurisdiction where we can develop this belt, develop this hub and spoke production strategy, knowing that the legislation, the timing to get permits, permits us to do that. Now, I've read numerous reports where people, or authors and so forth, have said the passage to production is a 10 or 15-year journey in the West. That is true. I'd say low 48 states, Canada, you're looking at a long decade of permitting. We've actually, in Brazil, we've probably seen more mines come into production in the last 5 years than all of Europe in the last 10 years, maybe the last 15 years. I don't think there's been a new mine built in Finland since the mining code got changed in 2011. So what we're looking at is a jurisdiction where we can actually build a mine in a time frame within the financial capacity of a junior company, but develop it as this hub and spoke platform for multiple decades of production, of stable production.
And what you described there in Brazil is a lot of the reason that you see major mining companies that are building there. Ross Beatty talks very highly about Brazil as a development place. And it really is becoming the number one go-to location in South America for the mining sector. And I don't know if that's really well known yet, Gilbert.
It's getting out there. Like we've seen like interesting analogies. We saw G Mining pick up Tocantinzinho a couple of years ago, and then moving it through now to production. And we've seen London Mining take some acquisitions. I believe BHP is putting their old Oz Minerals up for sale, and there's going to be an intensive demand for those assets. But what's interesting about this interest to develop things in Brazil is why we're actually moving the project forward to pre-feasibility this year. And one of the reasons we looked at that is, although we produced a very high quality PEA, we thought it was important to have more certainty, so that we actually went up to that higher value, higher certainty, and what we think would trend towards higher valuation. So we want to move away from our current 0.08 up sort of 0.35, 0.45 of NAV, of the valuation of the increased, what we think with the increased value of the project by producing a PFS. And let's just put it in context. When we did the original PEA, 1650 gold and 359 copper, the 5-year trend on copper and gold now has gone up. So not only are we going to have better commodity prices, we'll be shortening the term of the mine, the initial term of the Cabela mine, from 23 down to 14 years. But really what's important is by creating that sense of certainty that we're going to take this into production is important. And also proving to the market that we think will be, for the life of mine via a PFS, that we'll be producing over, I think, north of 120,000 ounces life of mine. And certainly the first 10 years will be above that again. So this is where we think how undervalued our stocks are, that we've made decisions now to build the value through certainty. At the same time, we've been moving all the permitting along at a rate that most people just wouldn't understand. We've actually, in December, we'd submitted the preliminary license, which is your main license. That's your social engagement, your EIA, and so forth. But that's for 4.5 million tonnes. So what we're looking to do with our PFS is, again, have that low capex, 2.5 million tonne throughput, pay that off very quickly, and then we can either A, refinance, or B, through working capital, increase it up to 4.5 million tonnes in year 4. And that, at the same time, which I can't do the nuances of 43-101, we'll be able to bring in the St. Helena mineralization into this concept going down the road. And that's, I think it's, at the moment, we've got an exploration target there, 10% of Cabela, but 3 times the grade. But it's just, we don't, again, what we talked about, the hub and spoke, it's not going to have to build a mill. It'll have a separate flow sheet, which will incorporate into the Cabela flow sheet. I perceive the only real difference will be the addition of a zinc circuit, because there's a bit of zinc in St. Helena. But it's very important that our shareholders and new, maybe those stakeholders moving into the stock now, is that we're very cost effectively moving this forward to that next stage of pre-fees, and then we're moving it on to the feasibility stage towards the end of this year, then into 2025. We're very much focused on building this mine.
And I always get a lot of comfort when I look at a country and watch the majors that are trying to get into that country. Brazil certainly meets that criteria. But another thing is that no matter which country you're involved in, that local management, that local team is really important. And you guys have put together a pretty stellar group of local Brazilians there to move these permitting and other issues forward.
Yeah, it's all effectively done in-house for the management of the project. And we actually didn't put this team together. This is for this project. It was a team that we had prior to it. We were operating a small project in Rondônia, the department to the next, the state north of Mato Grosso. And this is a team of engineers, geologists, accountants, lawyers, environmental engineers. And, this group of managers we have overseeing and largely determining the passage of the project forward at the Brazilian level. They've managed small mines up to being, one of our guys has actually managed the largest gold mine in Brazil. So it's really interesting that we have the ability to access not only the best people to operate at the project, but also to know within the forest of consultants that you have both in Brazil and internationally, which are the consultants that do the best work on time and cost effectively and at Brazilian costs and not at sort of international rates. Because I've seen a lot of companies that have brought in international consultants to
They're dead.
jurisdictions that know how to operate. But by having operators within the company structure, within the management structure, leading that Brazilian development team, it just takes away so much risk. And I actually, many years ago, I talked about this. When you're a portfolio manager, I'd call this execution risk. You want to be able to make sure that you've got a team that can execute the plan for the project. Very important when you're moving towards pre-feasibility. Like we did a gap analysis on the PEA of what was needed to be done for the pre-feasibility study. And it was just, we could take that management team, work with our consultants, our engineering firm, Asenco, GE21 for the mine plan, do that gap analysis, say what's missing from the PEA that it needs an addition. And it's mainly for some additional resource drilling, some minor metallurgical confirmation studies, and that was the macro parts of the gap analysis. But that's important for us that we maintain the exceptionally high quality work that went into the PEA and those high quality results, and make sure that is continuous into the pre-feasibility study.
You're actually punching above your weight class with your team there. You've kind of put together a team that some of the much bigger companies than you would be happy to have, I would think.
Yeah, no, we put a lot of effort into taking care of our staff, both the conditions of work, safety, interaction, and I think also the ability to listen is the key when you're dealing with your senior Brazilian management team. They say, look, this is how we can do it. This is the time frame that we can advance the PFS in, and also the technical excellence that they've achieved in their careers. That's very important for us. And I think it's not only our board, recent addition of Bruce McLeod, Neil Gregson to the board, really senior, experienced people, but not only the quality of our team, but I think some of our bankers know the share registry that we have now is filled with some of the best long-only funds, LATAM funds that you can imagine for a junior. And very unusual about that aspect is many times bankers have told me that certain funds will never invest in a stock unless it's over $100 million US. And I know that's just not the case with Meridian. We have very significant financial groups that manage astounding amounts of money, generalist funds, large ones, and they're in our share registry. And that's a reflection of the potential of the project and the ability of a country like Brazil to build mines in a time frame where shareholders can get a great return for the money. And we're seeing some organic growth in that share registry.
Well, it certainly is not lost on me, Gilbert, about the people thing, because we're in an industry that needs more people. And being able to put those people together at an early stage like you guys are, it is quite an accomplishment. And I think it speaks, we've talked before about how the people situation in Brazil is quite unique compared to pretty much every other country in the world where mining is happening.
And look, I think I read a USGS report on the decline of technical people and the problem that's it's creating in the US. We see the same. Quebec seems to be able to punch out a few graduates for the sciences. But look, we've brought together that technical team, but it's not only the results of proving up existing resources. In the last couple of months, we've brought to our shareholders and to the market the success at St. Helena. So with St. Helena, this is a really good example of having the good people, the people that give them the freedom to think and not just sort of follow a menu. So at St. Helena, we had 1,100 meters of old massive sulfide deposit partially mined as per Cabela. And we were drilling the up dip of it. And it was interesting that we hit a hole, I think, hole 360. It was a very nice hole, good intersection. We hit a top zone that was going, I know, 15 meters at 2 grams or something like that. I should remember. It was an arbitrary amount. I mean, we're throwing on numbers like that, and actually that's a great hit. And that projected very nicely to the up dip of the main deposit. But then we hit a lower zone, and that went 11 meters at 5 grams gold equivalent. And we went, well, that's a bit unusual. Where did this high grade lens come from? And when we looked at the historical drilling, we saw a lot of it actually drilled vertically, went through the known VMS and just stopped in a layer of rock called a gabbro, just stopped in this barren rock. And we then stepped back and thought, okay, a bit strange. We went, I think, 50 or 70 meters long strike, and we drilled through another zone and we hit the gabbro, but we pushed through and we hit 16 meters at 2.1 grams gold equivalent.
And that's with angled holes, right? So if your
Yeah.
body's like this and you drill like this, you can miss it. But if you drill like this, you cut across it.
Yeah, it cut across the gabbro. And then that was a sensational moment for us because we'd actually, and this is where we got to talk about again, the upside of this project. We in December we put out an exploration target for St. Helena, which was sort of 3 to 7 million tons at about 3 grams, somewhere between 300 to 760,000 ounces potential gold equivalent. And to actually then hit this lower lens, which we'd kind of modeled but not really assigned any metal to it. And then at the same time, we able to step out what was originally an 1,100 meter zone. We stepped out nearly half a kilometer, 2 holes actually. And now we've hit the sulfide at St. Helena has been extended up to 1,600 meters of strike length. The IP anomaly, which is very good for detecting shallow mineralization. Some people that may say different. That gave us nearly 3 kilometers of.
My mentor in geophysics said to me, and he likes to say that sometimes the magic works and sometimes it doesn't. What you have to determine is, does it work? That's the important part. And with you guys, that IP seems to be picking up the sulfides quite nicely, and it probably helps a lot that your deposit is right at the surface.
Yeah, very much so. And then to be able to trace that IP, you have the drilling very nicely match the intensity of the high intensity of the IP, and then to see that tail of IP go off to the east of St. Helena by nearly 3 kilometers now. But what we'll do is we're going to focus very much just in that initial 1.5. I mean, this is silly numbers. We're going to focus on the initial 1,500 meters of mineralization. Open pitable, I mean. And so that, say 3 gram, 60 gram, $60 a gram. So it's potentially $180 rock based on the gold equivalent, 60 gram, $60 a gram. I mean, that's incredibly rich rock when you're thinking it starts at surface.
Well, especially when a lot of mines these days are, a fraction of that open pit.
Yeah, and so we see this tremendous growth just in St. Helena. And then we see the potential for it for a future financial contribution to the Cabela mill. And people say, how do you then extrapolate that to the value of the company? I'm just saying, well, that's just more upside on not only on the current value of the NAV of the PEA, but when we have where I think it'd be a very robust PFS with a strengthened financial model, and you add on to that known upside that will also be published by or processed by the mill at Cabela. That's our concept for the development of the hub and spoke. Well, then the value of our equities today are ridiculously cheap. And that is the opportunity. I think everyone in the market's realizing that the lithium bubble
Boom,
is
bust
deflating rather quickly.
is
I think
busting.
lithium 80% over the last 12 months, the price, and uranium's had a very strong run. But the permitting process for uranium deposits is achievable but challenging, impossible in the West, I think, in some cases. And then you've got the standard bread and butter of copper and gold in a known jurisdiction for development. And then you see our equities, and for me, it's a no-brainer for a portfolio or for a PA account to actually take a very opportunistic entry price and build a position in the company.
Well, the hub and spoke really is quite exciting to me because I understand the ramifications of being able to truck material over to a plant that's already been paid for. But the specifics of what you have at Cabasal deposit and at Santa Elena is quite incredible because you've got very high grade VMS, but you've also got this secondary enrichment of your gold that can also be, and so I think that's not well understood because that gold likely comes from much deeper, and understanding that is could be a game-changing event as well, once you get, moving towards production. So that really intrigues me, that copper and high-grade secondary enrichment of the gold is quite an exciting situation. You don't see that a lot.
Yeah, no, it's present in Cabazal. It's equally present in the St. Helena deposit. We can trace very unusual gold anomalies along the belt. What's interesting about the St. Helena deposit was that it actually didn't have a gravity circuit. When it was mined, they didn't have a gravity circuit. The gold recovery was down to 62, 63%, which we use in our gold equivalents. But I'm certain that will have I'm hopeful that will have quite a robust growth in the gold recovery because we'll include a gravity circuit into the flow sheet studies that we'll perform on St. Helena. But the gold overprint is very unusual in two aspects, not only for its grade and its structural control, uh, but also the fact that it manifests itself in two different features. We have one feature, which are these subvertical high-grade gold veins, and as we've said since the start, good luck drilling them vertically, and basically both St. Helena and Cabasal are drilled vertically. But then what we've noticed is, we first noticed it in the Cabasal Northwest Extension. We have these zones of above the VMS sequence where it looks like barren rock, and we can get 25, 30 meters going, 1.8 grams, 2 grams gold. It's amazing. And when I first saw that, I thought, oh, it's probably a one-off, just an isolated event. And then recently we actually published, I think it was hole 365. In the last press release that we put out, we had a zone there that had 6.2 meters going 2.5 grams gold. So we had another layer of this gold flooding event. And when I look at that across the belt, and this has got only a very minor geochemical anomaly of just a slightly elevated of a metal called bismuth, or an element called bismuth, I should say. But we've actually seen this now in two different areas. So there's a real potential in this belt to have a preferential host unit where the rock chemistry is very enticing for gold to precipitate out from this later stage event, and for us to generate potentially some very large tonnages of gold in an open pit environment. That's a real sizzle to the steak. I mean, a real sizzle to the steak of the upside of the belt, not only the VMS centers, and we've got 7 of those hydrothermal centers to develop in the years to come, but also this late stage gold flooding event. It's remarkable, actually.
It surely is, and it's not lost on me. You mentioned the belt, and that's the nature of these VMS belts. They're volcanogenic massive sulfides, and they tend to come up in clusters.
Mhm.
And it's quite exciting that in the two that you've focused most of your drilling on, you've got that combination of VMS with the secondary gold mineralization, but that's gold at an attractive grade, an extremely high grade for an open pit. But the question is also, that's high in the system. What's below that? And it wasn't
Yeah,
understood because of the vertical drilling of the VMS zones historically. And now you guys are going in there with angled holes, which will help you to project the secondary enrichment of the gold veins deeper.
yeah. It's actually tying together quite nicely, and for the I guess some of the my fellow geologists out there, this entire VMS sequence, the VMS sequence that we see at surface, the great potential that um, Cabela is a VMS deposit. It's classified as a supergiant by the Geological Service, United States Geological Service. But underlying this entire belt, where we're going to develop this hub and spoke um, production asset in the future, there's an underlying intrusion called a tonalite, and then we think that's the heat source for the later stage gold event, and that's along the entirety of our tenements. It underlies that, so it's great potential. It's a strikingly well endowed mineral province, this Cabasal belt. I don't to see some, when we see that gold overprint, and we've made, I think the C2A discovery was a gold and silver VMS occurrence because it had a lot of sulfide associated with it, where the gold overprint it doesn't tend to have a lot of sulfide associated with it, but to be so free milling, I mean, it just falls out. And look, you'll see a lot of technical reports, and they talk about 48 hours of leach time, 50 hours of leach time. And I think they're feeding the chickens on the reality of this, because at Cabasal, it's going to take us, we project it will take about an hour to process the ore.
Using
Sorry, not the ore, the mineralization. Yeah, we can't say it all. We'll take it. It's from our test work. It's indicated it takes about an hour to process the mineralization to produce payable metals, and that's massively important in respect to energy consumption, reagent consumption. So, and this is really the strength, that we've got low capex, simple metallurgy, low OPEX, very quick processing times using open pit dirt, with an upside that we think has got decades of production potential ahead of it. It's a unique opportunity, and this is why we have this such a strong share registry of long only or lantame desks invested in the company. But when I look at the investment potential, we look at the NAV today, 0.08, and that's based on a PEA using well, gold's like 2040 today.
right?
So that's nearly just under 400 US an ounce above what our financial model use.
And copper's sneaking up to $4.
Yeah, that's about 25% above where we are. So when we look at the longer term commodity prices for this project, and you sort of factor that into your own or your financial advisor's estimation and modeling of the Cabasal deposit, the future value of the asset, and you extrapolate that to today's equity, it's a tremendous opportunity for growth. Again, it's hard asset building. With the trades, we've seen the resource markets trades in the lithium space, that trade has come off. The cheap seats in uranium, that they're gone. But again, I keep saying those bread and butter hard assets of copper and gold projects, they just keep going, keep going. They're stable, long only or growth assets. So I think this is the opportunity we're presenting to the market today, and we keep delivering it out. I don't know. It's we hope for better markets over the last 18 months, but they're not being kind to the base metals and the precious metals. And like I said, we've seen the trade in the lithium space. We've seen the trade in I call it a trade. And now I think we're very much, I don't know what you've read in respect to the copper space, but it does not look particularly good on the supply side. And we've seen a lot of investment in the gold space, but that's all been eaten up in inflation and higher operating costs. So for us to bring in an asset that's going to have low capex, low operating costs, no environmental liabilities at effectively a greenfields exploration upside is tremendous value.
Well, that's a great note to end it on, Gilbert. You perfectly described the value proposition and also what makes you guys unique in a small menu of companies in the development window of the Lassonde curve, and just keep on delivering. And we've seen this movie before, Gilbert. You've been in this business a long time like me, and we see booms and busts, and I think better times are ahead.
Very much so. In the Olympic size swimming pool of natural resource and investments, there's probably a thimble full of projects that go into production. And I'm almost certain that Cabela's in that very select group.
Thank you very much, Gilbert. I'm going to close it off. We can have a chat at the other end if you'd like.
Absolutely, Allan. Thanks for getting together today.
Well, I started the show by describing just how unique Meridian is for companies in a small menu in the development window. It's really a pure top of the list for their peer statistics. You got a small menu and top of the list for the statistics. That makes for a pretty unique story these days. As always, my shows are for information purposes only. I think you should go do your homework, check out their corporate presentation, check out their news releases, and I think you'll understand why I'm so enthusiastic about what Meridian has and how that fits into the mining sector food chain and for investors that want exposure to that food chain. So do that homework, speak with your financial advisors. Have a great day, and we'll talk to you soon.